Do you know when is the right time to buy or sell stock? Psst, of course! Who doesn't? Really? Yes. Really? Let's talk about that. If a country has a stock exchange, it will probably have an index to track the most valuable companies. For example, in Spain, where I live, you can track this. In the US, there are 3 main indexes that you must watch. They're one of the keys to let you know when to buy, when to sell, and when to wait. They track the largest companies and they give you the direction of the US market, which also has a great influence in all the markets around the world. Let's understand the basics of these 3, and then I'll show you how I track the market with the segmented watch list. And don't forget to like and subscribe. Let's start with the old school one, the Dow Jones Industrial Average, or DJI, or the DJIA. This is considered the stable one. It tracks 30 public blue chip companies, which most of them pay dividends. What? In English, please. In simple terms, a public company means you can buy stocks right now. A private company means you can't. A blue chip company is basically a large company, well established, and pretty much everybody knows about it. Can you think of an example? The stock price of these companies usually moves like the index. They have slow and steady growth, less volatility and less risk. Will the price jump 10 or 20% overnight? Most likely, no. They won't fall 10 or 20% overnight unless something really extreme happens. Let's talk about the S&P 500, the cool one. This tracks 500 large cap liquid companies, the best ones. Oh, large cap. Large cap? In English, please. This is very important, and we're going to talk about market cap and large cap in next videos. But for now, large cap is a high value company when you relate the price of the share times the shares outstanding. For now, just forget about the outstanding and its price times shares. If it's high, means large cap. And a liquid stock, in simple terms, pretty much means that you can buy or sell stock as many as you want pretty much instantly. There are so many people who want to sell or buy stock that you just go in, you buy 10,000 shares, and it's just like that. This is the king of FOMO, the technology one, the sexy one. The nasdaq. This tracks 100 large cap companies from the tech sector. I understood. Finally! Most of them are growth stocks and considered by many overvalued. In English, please. Growth stocks are from those companies that are expected to grow sales and earnings at a faster rate than the average. So they are usually valued at their future price and their potential to be awesome. Usually these kind of companies, they don't pay dividends because they reinvest the earnings so they can grow and grow and grow. You have to believe in the product. We used to have nothing to communicate. Then we had this, and now we have this. So one of the things that will help you know when to buy, when to sell a stock is by watching the market, watching this index. The companies within the index have different weights. For example, if you compare Apple, that has a big chunk, with Domino's Pizza, that has a tiny chunk, if the price of Apple starts falling, it will affect more the overall price of the index. The way to go one step forward, and the way I track them, is to add to your watch list different groups. the stocks you have in your portfolio, the potential stocks you want to buy, the main companies in the Dow Jones. You can grab 3 or 4, the main stocks from the S&P and the main stocks from the nasdaq. After that, you can group different stocks from different sectors of the economy. So remember, watch the market the right way. See you next time.